dear traders. Welcome to IFC Markets. You are watching weekly market overview by IFC Markets. Let's start. The US dollar moved down last week. The index of the US currency fell to a 5-week low below 82.00. Meanwhile, the main competitors of the dollar managed to take advantage of its weakness. According to the recent trading sessions, the Japanese yen has won back 2.3%, the Swiss franc rose by 1.4%, and other major currencies have added about 1% each. In the previous overview, we assumed that on the background of rather meager news flow and reduced trading volumes, short-term movements may lower the dollar rate a bit more. This was also pointed out by technical indicators that turned against the greenback in early July. Recall that last week, the European currencies got support from surprisingly strong PMI data in the Eurozone and the GDP data for the UK. However, the new week promises to be much more interesting on the scale of the whole market. In addition to the rich flow of statistics from the Eurozone, including inflation data, on Wednesday GDP data for the US and Canada will be published. According to market forecasts, the growth rate of the US economy may fall to 1.2% in the second quarter, following 1.8% in the first quarter. On the same day, the Fed meeting will end, at which, according to the latest rumors, a change in communication with market participants may be discussed. On Thursday, the official PMI index will be released in China for July. It should also be paid special attention to, since the issue of decelerating economic activity of the second world economy remains in the spotlight. On Thursday, the meeting of the Bank of England will end as well. No change in the policy of the regulator is expected now, but we are still waiting for a declaration of intentions by the new chairman Mark Carney. The parade will conclude at the ECB meeting on Thursday with the traditional press conference by Mario Draghi. Finally, on Friday, employment data in the United States will be released, the importance of which is now difficult to overestimate. In recent months, we have seen steady growth in the number of new jobs, but so far not in unemployment rate. According to the latest data of the Commodity Futures Trading Commission, market participants keep a net short speculative positions in all the major currencies against the US dollar, and the largest positions are observed on the Japanese yen and the Australian dollar. Last week, major changes in positioning were observed on the European currency, which reduced the value of the net short position, and on the British pound with increasing net short position. Overall, positioning reflects our medium-term view on the currency market, as we expect the main trend to be the strengthening of the dollar. Returning to the short-term picture, as a result of a 3-week drop, all correction targets on the dollar have been fulfilled. So far, the short-term technical picture for the greenback still looks vulnerable, but taking into account upcoming events, the situation can change instantly. And that is why we are waiting for an opportunity to take strategic long positions on the dollar, especially because the major currency pairs just came up to significant levels. Thus, the euro-dollar pair came to around 1.33, where the next area of resistance is situated. For the past 6 months, the euro remains locked in a range of 1.2750 to 1.3400, and we do not yet see any reason to overcome its upper limit. The pair pound-dollar is also near an important resistance level at 1.5400, waiting for a trigger. The dollar-yen fell below 98.00, trading at about 4-week lows, but the Australian dollar was unable to break above 0.93 and take the advantage of the 3-week US dollar weakness. You are watching a weekly market overview by IFC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Bye!